is Alex Matthew. With me is Mahima Vachajani, and this is Ask Profit, the show that gets you answers to all of your stock-related questions. And to that end, there are several ways that you can get in touch with us. You can either send us a message on the number on the top of the screen, or you can call us on the number at the bottom of the screen. We would love to hear your voice. Remember, if you're sending a message to us for the first time, tell us where you're tuning in from, what your stock is, or maybe a stock that you want to buy. And remember to also tell us what your time frame is ideally. Is it short term or long term in nature? Let's very quickly take you through how the markets are faring this morning. And it's another day of, wow, it's actually changed over the course of the last 20 minutes. And you have the Nifty 50 that's trading with cuts of about 0.7%. I wonder if this will hold to the close of today's session, because prior to today, the last 4 trading sessions have been pretty range bound for the Nifty 50. Even yesterday, despite the fact that you saw a little bit of chop and churn and a slide towards the end of the session, it's been quite range bound. So I wonder if the Nifty 50 will hold below the 25,000 mark as it is currently doing. I wonder what the broader markets are doing. Let's pull those up. The mid-cap index currently trading also with cuts of about 0.7%. So just over the course of the last 15 to 20 minutes or so, you've seen quite a bit of selling emerge. Let's also pull up the winners and the losers, or rather the advanced decline ratio, just to give you a sense of how that is faring. And you have a few clean signs. For example, there is news that the promoters are going to be selling 24% stake. Shoppers Stop reacting to earnings, down about 4.4%. Axis Bank also reacting to earnings, and particularly the technical write-offs that the bank has announced to the extent of 4,000 crore rupees. Street not taking it too well. Sterling and Wilson Solar, a decent set of numbers, but the order book and the order wins in the quarter not very good, and so that's having a bearing on the stock as well. Tata Com also in focus on account of earnings. Nuvoco, Vistas doing quite well, up about 3%, but off the high point of the day. Let's pull up the advanced decline ratio, because I want to see if that has shifted quite materially. There you go. What a dramatic shift over the course of the last 20 minutes or so. And right now you have far more declines on the screen. So it looks like we might just be ending the week on a bit of a weak note. We've got the first questions already in, and in fact we've got Sameer Dalal of Natwar Lal & Sons Stockbrokers and Jatin Gedia of Mirai Asset Share. Thank you so much to both of you for joining in. Manav is calling us and is the first caller today. Manav, very good morning to you. You're calling us from Gurugram. Namaskar, how can we help you today?
Hello, namaskar. Good morning, everyone. Good morning to the experts also. So I'm holding 50 odd shares of DLF at the average price of 733.
Right.
I have I can hold it for like 5 years. I have initial holding. And I want to know. I'm very much interested in this counter to add more. So, what would be the appropriate price to add more?
Yeah.
At what price I can add more? And what is the street? Is there any street estimation on the upcoming results? If I can get a brief on that Q1 results also.
Yeah. Okay. Let me ask Sameer what he thinks. Sameer, a lot has been said about the valuation of DLF as things stand right now. The fact that it's once again looking to enter the Mumbai market, the fact that it has that income that it is receiving through rental income, and that is expected to go up over the coming years as well, heading to that 10,000 crore mark. What do you think about the valuations as they stand? Would you build on it right now?
The valuations are a little bit on the expensive side, but if you have a 5-year view, I think the opportunity is quite large, right? So entering the Bombay market is not like the changing point for DLF. They have huge parcels of land in Gurgaon, which they're going to be developing. Like you rightfully said, the even rental income will continually keep increasing because they're building more projects, which they keep renting out. So overall, the business fundamentals are quite strong. Valuations are punchy. But I think, what's happened is the Indian markets have started to live with high valuations across the board. It's not something I'm in favor of, but the fact remains that people seem to be very okay with these high valuations. For example, Godrej Properties continues to trade extremely expensive, similar with the Prestige Estates from Bangalore. So wherever you are, if you're buying anything in the real estate space, valuations are punching. So if you have a view of holding for 5 years, keep holding on. If you're asking me the right price to add on to the stock, which is what the question was, I think closer to 650, 700 would be great if you get, but the probability is you may not get, given the kind of money that's there in the system and given the fact that real estate is being chased as an asset class, not as class, but as a stock investment from, that segment is something that's looking very attractive. You may not get that. So hold on. Look at other stocks in that sector. My suggestion, as I've been saying for some time, Keystone Realty is a Bombay-based developer under the brand Rustamji. You could probably diversify your portfolio a bit, plus have something at a little better valuation with good growth opportunities.
Okay, so that's with regards to where DLF stands, and of course the entire view on the real estate sector, and Keystone is what Samir is liking. All right, our next question is from Siju, who's writing us all the way from Qatar, and he's asking about Protean eGov, and it wants to know the right levels to make an entry in this counter. Jatin, hi, a very good morning to you. I'll come to you on this one. What do you think is the right time to make an entry into this counter?
See, Protean has been in a downtrend. We'll wait for the stock to, close above 840, 845, where we have the resistance currently. So at this point of time, I would not suggest to, jump the gun and try to catch a falling knife. So wait for the stock to close above 840, and then only we can re-enter or make a fresh entry into this stock. As of now, avoid is the suggestion.
Avoid Protean eGov is the suggestion that Jatin has with respect to where charts are concerned, of course. Dheeraj is our next caller. He's calling us from Hyderabad. Dheeraj, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. My query is regarding Reach Shipbuilders.
Okay.
I purchased 46 shares of Reach Shipbuilders at 2596. Sorry, 2600, ma'am.
Okay.
So, should I stay in the same counter for the short term, or should I shift to something like HCL or Persistent, which have corrected, is my query, ma'am.
Okay, Dheeraj, I got your question. I'll take this up with Jatin. Jatin, are the charts attractive enough for Reach to continue to stay invested, or shift to something like a Persistent?
I think the charts are suggesting a little more downside towards 2280 on the downside. So that's a decent 300 point downside even from current levels. Now at this point of time, we believe that the places to hide would be FMCG and pharma to some extent. The defensives would be these sectors to hide out. So at this point of time, GRSE, some correction is warranted. Look out for stocks like Marico, HUL, Godrej Consumer, where you can park some of your investments currently.
All right. Okay, so that's the view on Marico. Guna has got the next question, writing in from Hyderabad and asking about PVR Inox. He's bought at levels of 1,052. He's got 500 shares. The stock is currently trading below that, but because of the size of his purchase, he is losing about 44,000 rupees at this point. He intends to hold till at least 2029, and he's wondering whether there's a four-fold or five-fold increase that is possible over the course of this time frame. Samir, what do you think?
So four-fold and five-fold is difficult to say. Look, the problem for PVR Inox has been twofold. One, the online, the Netflix, the Amazon Primes, and all this content that is now available at home, that is kind of eating into some amount of the spends that are happening at the movie theaters, because you can sit in the comfort of your home and watch a nice movie or show or whatever. You don't need to have that entertainment necessarily going to a theater. Now, going to a theater is an experience, and that is something that will obviously remain. So we do believe that there will be people constantly going to the theater, but where the second problem has been is the content has not been the greatest over the recent past, right? So what is very important for this space is the content comes in that is something that draws the public in. And that has been a bit of a lack, and that's why you've seen this stock not doing too well. Then you also have certain news where certain states, they want to cap pricing on tickets. I think it was Karnataka government that said they want cap pricing on tickets, so that works out as a bit of a negative. So these overhangs have led to the stock being a decline. We believe the growth for the space is still good, because yet I think the opportunity for multiplexes to expand is there. But I'm not saying you'll get a 5x, but definitely you can get a 15 to 20% CAGR return over the next maybe 5 years. So if you're willing to stay invested, if at 15%, maybe or 20%, you could be 1.5 times in 5 years time, not 4 or 5 times.
Okay, that's a very interesting take, and the ticket pricing that he's talking about is Karnataka, which is a big market for PVR Inox and has capped tickets at 200 rupees. So that's a big overhang for sure. All right, the next question is from Hansraj Nahata, who's writing us from Delhi. He's got 1,500 odd shares of healthcare global enterprises bought at 550 a piece and wants to buy more at the current levels and wants to know if this is a good counter to continue to hold for a longer term from a longer term perspective. And this question is directed to you specifically, Samir. I'll come to you. What's the view like for healthcare global enterprises?
So it's a good counter at the end of the day. Again, punchy valuations when it comes to the entire space. Something like this, the healthcare space and especially in the hospital business will continue to see traction growth. We've seen the stock has had a massive run up if you look at it over the last maybe 2 years or so. So you're paying top dollar for it. So if you want to buy some more, I think wait for a while. You might get a time-based correction, maybe not price-based, and that time you might get a better opportunity to get better returns on your money. It's a good counter to hold for the next 2-3 years, but I would not be willing to add at this point of time.
All right. So Siemens is the name of the counter we're talking about next, and Vijay from Mysuru is asking a question. He's got 110 shares at a price of 3,700 rupees per share. He's got a short-term outlook of the next 3 months, and he's wondering what the potential upside is from this point, and he's losing quite a bit of ground at this stage. Jatin, on the charts, is there a possibility of him recovering his buy price, and how long would he have to hold for that to take place?
Yeah, see, currently post this correction or sideways consolidation, it has reached its 20-week average, which was around 3,040. And now from there on, we are witnessing the buying interest also kicking in. So we believe that it has reached its now crucial support zone, and we can expect a move towards 3,400 to even 3,500 from a short to medium term perspective. So hold on is the suggestion with a stop loss at 3,000, and he can expect, or if he can add more at current levels, then nothing like it, and we can expect 3,400 to 3,500 from a short term perspective.
Okay, so hold is the view on Siemens with respect to where technicals are concerned. The next question is from Satyan. He's holding Colte Patil with around 55% of profit is what he's saying. And he's saying that is it better to switch to something like a Ahluwalia contract for the next 12 to 15 odd months? Samir, I'll quickly come to you on this one. Your take on Colte Patil, and if you don't like the counter, should you shift to something like Ahluwalia contracts?
So I don't have coverage on Colte Patil, so difficult for me to comment on that. Neither is the Ahluwalia under my coverage. But if you're looking for something in the construction space or the real estate space, the one we recommended for real estate is Keystone Developers. If you're looking for a counter which is doing the actual construction activity, which is what something similar to what Ahluwalia does, one of the counters that we like in the space is a company called BL Kashyap, which is kind of a turnaround over the last many years. The stock has seen a decent correction from 110 odd levels to maybe 70 odd levels. Look, they have good order backlog with the construction activity continuing to take place in Delhi and NCR region where they have a primary focus. We think they will continue to do well. Valuations seem expensive, but once the operating leverage kicks through, I think you'll see that the valuations are not so expensive. So those are the two I would recommend given that. I just want to if you give me 30 seconds, about Siemens, I don't think 3,700 is the right price. And if it is the price he's bought it at the previous question, it may be before the demerger that happened for the Siemens.
Let me check. Yeah. It's an important point that you make.
Siemens has not gone to 3,700 post demerger.
Yeah. It's an important point that you make. I will check. I will write to him and ask that question. In the meanwhile, let me go across to this interview that we did with Polycab India. It has reported a strong set of numbers in the first quarter, and in fact, a 50% year-on-year growth in net profit. The revenue from operations also surging. In fact, Mahima spoke with him, with the management, Mr. Tongia, and here's what they had to say.
Mr. Jaisinghani, I'll start with you first. As I mentioned, it's been a great quarter, strong execution in terms of cables and wires. There's been growth momentum that has continued. FMEG profitability is improving quarter by quarter. Just want to get a sense of this quarter. What is the volume versus value growth been like? And because the kind of revenue growth that you've seen, have you seen market share gains as well?
Yeah, market demand is good and availability we are keeping and supplying material. Demand is good and still looking better in future.
All right. Mr. Tongi, I'll come to you on this one. Have you seen volume growth this quarter? If yes, what's the gap between that volume versus value growth? And plus market share gains is also seen this quarter?
Thank you so much. You're absolutely right. This was the best ever first quarter in the history of the company. We did close to 6,000 crore rupees of top line and bottom line of 600 crore rupees. At the company level, the growth is around 26%, and cable and wire, which contributes close to 85% to the company's top line, registered a volume growth of mid-20s. Within that, cable grew at a rate which is higher than wires growth rate. So cable was perhaps around in late 20s, whereas wires was in early 20s. And in terms of FMEG, which contributes almost 5-7% to the top line, has also registered a fair amount of growth, a leader being the solar category. And other categories have also improved performance, particularly on the premium side of it.
Okay. In terms of your EBIT margins also for the capex business, Mr. Tonga, I just want to get a sense because they've been in the range of that 12 to 15% mark. Considering that competition is also heating up, do you think some impact or pressure on the margins going forward, or will they be in that same range? And if yes, will that be on the upper side of the range?
You're right. We gave our guidance for the next 5 years in Jan this year. We call it Project Spring, wherein we are trying to transform the organization. This, in a way, is an extension to our previous transformational project, Project Leap. Within the Project Spring, we aspire to grow at a rate better than the industry's growth rate in cable and wire, perhaps around 1.5x of the industry growth rate. As far as FMEG is concerned, we would like to grow at 2x of the industry growth rate. On profitability, let's split it in two parts. On cable and wire, historically, we have been guiding 11 to 13% of EBITDA margin. We believe we should be able to maintain it, and wherever possible, probably would be able to improve it. As far as FMEG is concerned, last 2 quarters, we have been able to report profitability in this segment, March as well as June this year. Between now and 2030, we would like to get to 10% of EBITDA margin in FMEG. So overall, at a company level, it's possible that we are able to improve on our profitability predominantly because of FMEG improvement.
So then where do you expect the blended margins to be at on a consolidated level basis?
So as you know, the cable and wire, our guidance is 11 to 13%. FMEG will improve from, say, whatever, 2-3% to 10%. That is where there should be a possibility of some improvement. On the other side, there are some expenses which we'll have to probably incur as we go along. For example, advertisement and publicity is slightly under index at this stage. So we'll do that. We are also doing a lot of capex. This year, likely number is going to be around 1,500-1,600 crore rupees. This first quarter itself is 400 crore rupees. So if we were to take a balanced view, it's quite possible a few basis points here and there. But we are aspiring to have profitable growth, sustainable growth, and industry-leading growth.
Okay, so 15% margins is doable, correct?
What I'm saying is today we are hovering between 11 to 13% on cable and wire, and FMEG we should be able to improve. And on a blended basis, we are looking for a profitable growth. And I would probably take you back to 2020 guidance, which I gave. We don't give quarterly annual guidance.
Okay. Mr. Jaisinghani, just want to get a sense on the exports part of the business. It is revived, saw 24% growth this quarter itself on a YOY basis. Just want to get the export scenario considering everything that's happening in the US with regards to tariffs. Of course, we are not certain yet as to how the tariffs will be imposed, how much percentage will be imposed on India. But how is it looking like? What's the scenario like?
I think so. Export will be continue because let it be whatever tariff come. But definitely our relation with US, our PM's relation with them, I think so they will support to India. And they will definitely put the tariff, but they are not going to put a huge tariff to India. So that will be, the export will be continued.
Right. But
and
then,
demand is good there.
Correct. So then do you think that export business will see that impact, and if yes, what do you think will be the impact on financials then going forward? Mr. Togia, you can go ahead and answer that question.
So exports, as Inderbai mentioned, is an important line of business for us. Under Project Spring, our guidance is that we would like to get to 10% of exports contribution to top line. 5-7 years back, it used to be 100 crore rupees, and it is material number already contributed to almost 5.5%, 5.23% to the top line. And it's not only US-based exports; it will continue to be there across all the geographies. We already have presence in 80 plus countries. So it's a broad-based growth opportunity. We are taking all the initiative to grab this opportunity, and we firmly believe that in years to come, we should be able to improve on exports contribution to company's top line.
All right, the management of Polycab and quite a few brokerages coming through very positive on the stock and the outlook going forward. They've raised their target prices as well. I think Macquarie was one of them, if I'm not mistaken.
No, they've not.
No.
I'm not sure.
Jefferies.
Yeah, I think
Jefferies dramatically increasing it. I like the interview, by the way.
Yeah.
I saw that you pushed them a little bit to try and give you a guidance for them.
Guidance for their margins for sure, but they did not budge.
Well, you got to try.
Yeah.
Having said that, let's move back to the questions that some of you have asked. And by the way, if you've got questions on Polycab, you know where to send them. Bharti Airtel is the name of the counter that we're talking about next. And Santosh is writing in from Hyderabad. He's seeking a view from you, Samir, on the fundamentals. He's bought levels of 1,960, 4,400 quantity. What is a view according to you? And we'll see Reliance Industries results. We'll see Jio results today. How do you rank? And I'm not even asking about Vodafone Idea. I know your view on that. But between the two, would you say that Bharti is going to be the right bet in the telecom space?
So Bharti is the only bet in the telecom space you can actually make if you want, because Jio, you're buying Reliance Industries, which you're buying a whole bunch of other stuff as well. I mean, I'm not saying that's bad stuff, but it's not a telecom play per se. And the carrot, which they've been dangling, that's been pushed back further. So I believe now they're not even going to do the IPO in the current financial year. So Bharti is really the only play you can make an investment in the telecom space. Now, again, the problem with Bharti is valuations, right? So given it's kind of I'll not say it's a duopoly, but it's more or less a duopoly given that fact that Vodafone Idea is just limping along. Bharti will obviously be able to get share. And as the ARPUs keep moving up within India, the profitability will keep increasing for Bharti. So I think it's something that will do well over maybe a 5-year period, but you expect very, very muted returns or even over a 5-year period for the simple reason that you're paying very lofty, high valuations for Bharti right now. I'm not talking about purely the India business. Even if I look at the all the assets that he owns internationally and everything, I think you're paying very, very high valuations. So unfortunately, you bought it at a very high price. Maybe if it comes closer to 1,500, I would advise you to average on. Again, like I said, given the fact that we're living in a scenario where valuations don't seem to want to come off, you may not get that, but don't expect these high valuations to sustain forever. At some point in the near future, they will come off, and that's why I think returns will be muted. So if you can find something else to invest in for the time being, take this money off, find something else, and buy Bharti at a lower price.
Okay, so that's with regards to where the entire telecom space stands, and for Samir, that's just Bharti Airtel. All right, Samir, since we were talking about the Jio IPO, there's one more question on Reliance. Kaushik is writing us from Vadodara, Gujarat. He's bought Reliance Industries at 1352, and he's got 20 odd shares, and wants a long-term view on this. Considering that we are expecting the earnings today, what is the kind of expectation that you have from the earnings, and should he continue to hold?
Yeah, so first of all, you can continue to hold on to the stock. I think the long term for them is still very good. Look, the 1 quarter results won't change anything for me. I mean, if you ask me what I'm expecting of the results, I think the results will be fairly in line. You will see a big jump up in profitability because of maybe that sale of those Asian Paint shares. But I mean, that's a one-off. So I wouldn't, if we eliminate that part of it, I think they'll do quite well, right? I mean, they'll do a stable set of numbers. Now, let's talk about the various businesses. And just quickly, we believe the telecom business, they are the second largest. I mean, they are the largest player actually when it comes to it, and most profitable player at the end of it. They will continue to do well. So whenever the listing for that happens, will lead to value unlocking. The retail business, they are again the largest when it comes to store footprint, the space that they have, the number of brands that they have under the entire basket. We believe that the consumption growth that's going to come over the next 2-3 years is going to be really good in India, and Reliance will obviously be one of the benefactors of that. And once the operating leverage for them starts playing out, I think people will start thinking that the retail venture should get a better valuation. Oil to chemicals will continue to do what they're doing. It's a cash positive business, which will continue to remain so. But what they're getting into, the renewables, setting up all of the renewable energy, getting into green hydrogen over a period of time, the new age businesses that they're going to be doing, I think that will lead to a lot of upside potential. So stay invested in Reliance. I think the long term is really good. Valuations are not mad expensive. Actually, one of the few counters where I can say that valuations are good, that you can even go out and buy today at these values. So I'd say stay invested, and if you can, whenever you get a chance, add some more.
All right, so that's view on Reliance Industries. Jatin, I understand that you have to leave us, and thank you so much for joining us today. Really appreciate the time that you spent with us, and happy Friday. We have to slip into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
Brought to you by Canara Bank. Together we can.
Sammaan Capital Limited announces a public issue of secured redeemable NCDs, offering coupon rate of 9% per annum for NCD holders in category 3 and 4 for 24 months in Series 1. Tranche 4 issue is open for subscription. To subscribe, log on to www.sammaancapital.com. For issue structure, risk factors and more details, please refer to the Tranche 4 prospectus available on the websites of SEBI, stock exchanges, company and the lead managers.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, मैंने कहा ड्रीम में तो यही गलियां आती। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं, तब लगा कि लाइफ में ग्रो किया।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
ये रोशनी का सफर दिलचस्प है, दिलचस्प है।
हम सूरज से सिर्फ बिजली नहीं बनाते हैं, खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं।
ये रोशनी का सफर
अदानी, हम करके दिखाते हैं।
Hello, Moto.
you. Watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen. And as we speak, markets are actually trading at its day's low points. Almost 42 companies out of the Nifty 50 companies are now trading in red. Nifty down by about 0.7 odd percent. The Nifty IT also under pressure by 0.4 odd percent. Nifty Bank seeing a downtick of around 1 odd percent in trade today. But with that, let's also welcome in Rajesh Bhosle on this side of the show, equity technical and derivative analyst at Angel One, joining us now. Very good morning to you, Rajesh. We've got our next caller who's lined up. Pradeep is calling us from Bengaluru. Pradeep, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. I'm having Gland Pharma, 30 shares bought at 1365. Now, it was below my purchase price for long, but recently it has started rising. So, should I hold it for a long term, say 1 or 2 years? Or should I book profits at this stage?
Okay, Pradeep, I got your question. I'll take this up with Samir. Samir, your view on Gland Pharma?
Sadly, Gland Pharma is one of the few companies in the pharma space that we don't cover. So no comment on that. But the entire pharma space is expected to continue to do well. It's just that you got to see what the exposure of Gland Pharma is to the US markets, and if Donald Trump does put in some sort of tariffs, and how quickly or how efficiently they'll be able to shift that. But barring which, I don't have a view on Gland Pharma.
Rajiv, your quick view on Gland Pharma with respect to where charts are concerned?
So technically, if we see recently the stock has given a saucer pattern breakout at around 1900 levels. So we see extension of up move possibly towards its previous swing high of 2200. So buyer can hold on to it. 2200 is what we are expecting. In fact, any dip towards 1900 would be a buying opportunity.
Rajesh, apologies for that slip of the tongue. Mahima will buy you a coffee later for getting your name wrong.
No coffee for Samir this time.
This happens to one of us every week. And I'm terribly sorry.
Very sorry.
It usually happens on a Friday, Rajesh. So maybe we should call you on another day of the week. All right. So let me get the next question. Mithun from Karnataka is saying that he wants to start trading. And his plan is to start with 1 lakh. And he's wondering what his strategy should be. Could you help him? It's for you, Rajesh. Yeah, it's for you.
Okay, so first of all, Alex, wonderful combination of coat and shirt you are wearing.
I think my inspiration came from you, though I don't know about it.
Okay, so I think it's from a 1 year's point of view, if I'm not wrong. So overall, what now we need to do is we need to see which sector that would perform from going ahead from here on. So the sector that we are bullish is auto and cement space. And from the auto pack, if we see, we are very strongly bullish on M&M and Hero Moto. And also, if we see cement space, we are very bullish on Ultra Cement and Ramco Cement. So sectors rotation is what we need to see, because we don't expect a broad-based buying, but sectors that will perform, and auto and cement is what we are expecting to perform in the coming year.
Got it. Hopefully that gets you started, and if you've got specific questions about any of the stocks that were mentioned or any other that you spot, then you can send your questions here. Shiva is calling us from Chennai. Shiva, very good morning to you. How can we help you today?
Hi, good morning, and thanks to Ask Profit. I very closely watch your show almost every day.
I'm glad.
My question is regarding Tata Steel. I purchased it towards end of last month with a long-term view.
Okay.
I just want to know, I purchased at a price of 500 shares. Just want to know whether, it's flat after it went down a bit. What's the view of the company? Is it time to accumulate more, or what? Or will there definitely be an upside, or how is it showing?
Yeah. Am I right in assuming that this is part of your long-term portfolio though, Shiva?
Correct, yeah.
Got it. Okay, so then the question is to you, Samir. Tata Steel, there's a lot of buzz, and I think every time there is some conversation about China data coming in a little better than expected, there's a spurt in metal prices. and as a result, metal counters go up. There's so much in the way of tariff announcements that has had a bearing on these counters as well. What would you say specifically about the business and the fundamentals of Tata Steel, though? Would you add more?
So, the fundamentals of Tata Steel are probably far better than what they were in the last maybe 3 to 4 years. They've managed to bring down their debt levels. They've paid off some of their loss-making units in the UK. And the fundamentals keep getting better. But remember one thing about steel companies, especially, anything to do with commodities, they're cyclical in nature. So when you say you want to have them as your in your portfolio as a long-term investment, it's great to have it, but expect huge ups and downs over the period. If you pull up maybe a 5-year or 10-year chart on Tata Steel, you'll see massive up moves and down moves. So right now, we believe we're still in the midst of a bull cycle for for the metal space, and that's why Tata Steel, being one of the counters which is doing quite well when it comes to everything, it will continue to go up, and we believe the stock would probably move towards the 200 levels. But keep a very, very close eye on commodity prices, and if at any given point of time you start seeing commodities starting to peak out, or supply increasing in a huge way from China, or certain things happening, then get out of these counters, because the fall that can happen can be very, very large. So I'm not a big bull, perpetual bull on metal counters, but Tata Steel, given where it stands and given where commodity prices are, can continue to do well over the next year and a half.
Okay, so that's with regards to where Tata Steel stands. The next question is from Mani, who's writing us and asking about Varun Beverages. He's got 606 shares of Varun Beverages at the price of 453 and wants to know if he can continue to hold from a short-term perspective. But it's an interesting question, Rajesh, because he's asking how long can it rally in the short term? What do you think? Is there further upside that you're seeing on the charts?
So this week, if we see, the stock has outperformed and is up around 8%. In fact, on the weekly chart, we are seeing that last 5 weeks weakness has been engulfed. So yes, in short term, we do expect a further bounce back. Possibly 520, 530 is what we are expecting. So can hold on to it. And on the downside, if we see somewhere around 470 is a strong base for the counter in the near term.
Okay, all right. Ashoka Buildcon is the name of the counter we're talking about next. And Kishore is saying Namaskara from Bengaluru. He's bought at levels of 180.7. And he's saying that they're showing, according to him, what he's seen, Sameer, they've shown good earnings growth over the years. And considering the exceptional demand on construction, would you mind providing... Okay. So he's asking for order book guidance. I guess this is a question that we can ask to the company next time we speak to them. But how do you look at the fundamentals? Sameer, would you say that this is something that you would buy? Would you say that the valuations are reasonably attractive?
The valuation for Ashoka Buildcon have been reasonable for quite some time. I mean, if you look at it, what they own in the road construction projects, where they are obviously looking to divest some amount of stake and all of those. But, this company has kind of disappointed for me for a period of time. I actually was invested in it for quite some time. And then given the kind of stock performance it had over the last many years, we've actually taken a call to exit it. The fundamentals remain decent. We believe the construction space will continue to do well. They will continue to get decent orders. They will execute it. But for some reason, this stock just doesn't seem to perform. So we've taken an exit. I think there are other counters in the space which probably have done far better, where orders have been growing at a quicker clip. So from that point of view, I think rather focus on something else than an Ashoka Buildcon.
All right. Balaji is calling us from Madurai with the next question. Balaji, very good morning to you. How can we help you today?
Yeah, hi, very good morning. I would like to say that I'm a regular person who watches this show. Appreciate your efforts.
Thank you so much, sir. Really, really nice of you to say that. Please go ahead. Please go ahead, Balaji. Yeah.
I do have a query. Is it the right time to buy HDFC Bank shares? Because I am an investor who wants to invest in all the categories like large cap, mid cap and small cap stocks. So I would like to know from the experts.
Okay. That's a good question, Balaji. And let me take your question to Sameer. Sameer, possibility of a bonus, and I was actually looking at whether or not banks usually do a bonus issue. And it's not very common from what I saw. And there was an interesting comment that I read on social media. Somebody was just pondering, the banks need capital, of course, to grow, and they have to give out dividends as well. This is something that they do. But when they give out the bonus, it doesn't really do anything for them, and it creates pressure on dividend payouts down the road. Is that something that you agree with? And also, that's an aside. Balaji's question was essentially, should you buy HDFC Bank?
So to answer Balaji's question first, I don't think there's ever a bad time to buy HDFC Bank. If you look at the history, whoever's bought it at any point has made money. Yes, the stock has run up, but if you have a 3-year view, I think you'll continue to make money. Now, coming to what you discussed on bonus, so bonus really doesn't change anything for anyone, right? It's not saying that because they've given a bonus, then now if they've given a 10 rupee dividend last year, after they give the bonus, they'll give a 10 rupee dividend. Dividend is always as a percentage of the profit that you make. So that will change accordingly, obviously. And that doesn't change the dividend yield when it comes to, the pricing or what the stock prices so that doesn't change anything. So I don't see it. It's just that when you give a bonus like this, it allows the price to come off and maybe some smaller investors can get into the stock rather than only, many large investors. So it kind of it allows smaller investors to invest. Beyond that, there's no really reason for giving a bonus, if you ask me.
Okay. Our next question then is from Angad, who's writing us from Indore. His question is on Mahanagar Gas Limited. He's bought at the levels of 1324 and wants to hold for the next 6 months to 1 odd year. I'll come to you on this one, Rajesh. In terms of Mahanagar Gas, what are the charts indicating?
So recently we have seen a channel breakout on MGL, and after a mild correction this week, we are seeing resumption of up move. So higher bottom chart structure is forming on the MGL. So definitely a hold kind of counter. In the near term, we expect a strong support around the levels of 1465, which is a strong support of 20 EMA. So 1465 would be the stop loss, and on the high side, possibly the stock can move towards the levels of 1650 in the near term.
Okay, so that's with regards to where MGL stands. Our next caller, Shankar, is calling us from Chennai. Shankar, hi, away. Good morning to you. I believe you have a question on Piramal Pharma.
Yes, very good morning.
Good morning.
I want to know about Piramal Pharma, madam.
Yes, okay.
Is it correct time to enter it for long-term investment?
Okay, I got your question, Shankar. I'll take this up with Samir. Samir, Piramal Pharma, what's the view like?
I think one can continue to hold. Yes, valuations again a little punchy. It's trading at about 40 times historical, but they have a decent pipeline of products coming through. They obviously cater more to the Indian market as well. So we believe the growth opportunity there is also quite good. So I'd say continue to hold on. Expect slightly, maybe a 12 to 15% CAGR return over the next 2 years. Any correction would become a better buying opportunity. So closer to maybe 160, 170.
Okay. All right. Sushila is writing in from Bellary in Karnataka. NTPC Green is the name of the counter. 112 is a buy price. 726 shares have been bought by Sushila, and wondering what to do with this. Currently trading at 111, so very close to the buy price. On the charts, Rajesh, what's the view?
So as of now, not much is happening in the charts. If we see last 1 month, it has been consolidating within the range of 120 on the upside and 103 on the lower side. So as of now, no momentum. But yes, definitely some higher bottom structure is there. So can hold on to it. 103 would be the stop loss. And on the higher side, 115 is what the immediate resistance is. That also coincides with the May swing high. Once 115 is taken, then possibly the stock can move towards the levels of 135 to 140. So as of now, hold 103 would be the stop loss.
Got it. All right. Jitendra is calling us from Hyderabad next. And Jitendra, very good morning to you. How can we help you today?
Yeah, good morning to all. Sir, I'm holding the 70 shares of Sona BLW at the rate of mentioned there. So, sir, mutual funds are aggressively buying the shares, and can you please tell me that can it be a good bet in future, like multi-bagger?
Multi-bagger. What is the time frame that you have in mind, Jitendra?
I can hold up. EV sector will boom in future. No, I can hold more than 2 years.
More than 2 years. Okay, Samir. So So auto ancillary player, of course, Sona BLW. I haven't really seen the data, and I must go back and look at which mutual funds are buying. But Jitendra seems to have read something. What do you make of it? Would you add at these levels, and what are the prospects for 2 years?
Yeah, so we are quite positive on Sona BLW, and 2 years is a great period to be investing. This company's seen a huge correction recently. The prices valuations have become, I'll not say cheap, but closer to fair. Now, what we believe is the growth opportunity for this company is still very strong. Unfortunately, recently the promoter just passed away, so we need to see how the new management now who's going to steer ahead and guide the company going forward. But we believe, look, they have great prospects from the electric vehicle side. They're one of the largest providers of certain products to Tesla. In fact, yesterday there was some news that they're looking to tie up with BYD for certain products in China. If they're able to do that, BYD is the largest electric vehicle manufacturer in the world, which is going to continue to grow. So I believe long-term, Sona BLW is something that will do well. Yes, you can go out and buy at this price as well. I think in the next 2 years, probably we could see a high of close to 700, 750. So I would recommend a buy for this one.
Okay, recommend a buy on Sona BLW. All right. The next question is from Akshay, who's bought HAL at 3489 per share and has got 144 odd shares. Wants to know if he can book profits at the current moment or hold for a year or so. Rajesh, I'll again come to you on this one. What are the charts indicating for HAL?
So from a short-term point of view, we are seeing a topping out formation. The recent swing low has been broken, and earlier 50 EMA was acting as a support, and that has been reached. So in the near term, we are expecting price correction, possibly a dip towards 4,300 is what is expected. So yes, profit booking can be done at current levels.
Okay, so that's the view with regards to where HAL is concerned. Our next caller, Shankar, is calling us from Kolkata. Shankar, hi, very good morning to you. How can we help you today?
Good morning. I'm having 150 shares of Birlasoft.
Okay.
Bought at 293 rupees.
Okay.
Now, I just wanted to know whether I should hold it for another 1 or 2 years, or should I book my profits and shift to Deepak Nitrate?
Okay, got your question, Shankar. Samir, he's sitting on profits of almost 20,000 odd rupees. Should he book profits for Birlasoft and shift to Deepak Nitrate?
So definitely, I think you can book profits in Birlasoft. I think, look, I've not been very positive per se on the entire space when it comes to the IT. So I still believe that there are better opportunities in different segments. Now, book the profit. Now, should you be invested in Deepak Nitrate only specifically? So I believe the fertilizer space will do well, the chemical space, but I think Deepak Nitrate is not the counter that I would be recommending, given the fact that valuations are high, given the fact that growth has not been there and the chemical space has not been doing relatively well in the recent past. I think there are other opportunities when it comes to auto, if it comes to banking and financial services, when it comes to consumption. I think that is where my focus would be. So I'd rather find something in those spaces. I can tell you, if you were looking at the bank, IDFC First Bank is a great investment. HDFC Bank, IndusInd Bank. If you're looking at the consumer space, anything in the QSR space would be something that will do well. Westlife Developers, Restaurant Brand Asia, Sapphire Foods, Devyani, those are good counters. If you're looking at clothing, then you can look at a Trent. Of course, Trent is valuation very expensive, but operating leverage can be great. Otherwise, a Vedant Fashion is something you can look at. So I would focus more on that side than anything. And if auto, of course, Sona BLW is there. We think Tata Motors is a great investment. Hero, Honda, Bajaj Auto, any of these are good investments to make over the next. So I'd stay away from a Deepak, but yeah, these are some of the counters I can suggest to you.
Samir, you can tell, or at least I can tell, how long somebody's been looking at the automotive space when they say Hero Honda. But point well made, and quite a few stocks that you can choose from. So not just, of course, the viewer that asked that question, but anybody who's tuning in, a whole host of fundamental buys that Samir has suggested. Apollo Hospital is the name of the counter that we're talking about next, and short-term target is being sought by Malika Mehta who's writing in from Mumbai, and she's bought at levels of 7,750. Actually, no, can it be bought at this current level for a price of 7,750? She's talking about the next 6 to 9 months. Rajesh, on the charts, what's the view?
So if fresh entry needs to be done, then the ideal level to buy would be around 7,200. In the past, in the start of the June month, we had seen a breakout around 7,200, and recent low also coincide around that levels. As of now, the short-term momentum is on the downside. So if fresh entry wants to be made, then 7,200 would be the right levels to enter.
All right. Okay, so we just got a view on HDFC Bank on the fundamentals, and of course, Samir has said that you can buy. I just want to very quickly, Rajesh, ask you whether you would, if you bought at levels of 1993, as Mandar has done, how long would you intend to hold if you're only looking for a trading strategy, and what levels would you look at?
So from a trading point of view, if we see somewhere around 1950 is the very short-term support that can be kept as a stop loss, because in the past we have seen 50 EMA acting as a support, and with results around the corner, that support would be very crucial. If prices hold on to 1950, we can see a bounce back back towards 2040 to 2050. But if 1950 is broken, then some short-term downside can be triggered towards 1900. So from a short-term point of view, 1950 would be the stop loss.
Okay, we've gotten a lot of questions for companies that are around that 1,000 crore or less than 1,000 crore, even 50, 55, 300 crore market capitalization. Unfortunately, we're not going to be able to give you very detailed answers on any of these. We will try, of course, but we may not be able to promise that. Narayanan is calling us from Bengaluru. Very good morning, Narayanan. How can we help you today?
Yes, sir. I have bought Lakshmi Organic at the rate of 204.
Okay.
About 1,500 quantity I have bought.
Right.
So what should I do? Last year by the same time I sold it at the rate of 270. As it corrected from that level, I thought it is wise to enter the stock.
Right.
And it is always taking support at the rate of 180.
Yes.
So should I hold it for a month or 3 months, 3 to 6 months period?
Let me ask
Can I please
Rajesh.
suggest?
Yeah, let me ask Rajesh what the strategy should be. 204 is the buy price. What would you do, and where would you place the stop loss?
So not much has happened in Lakshmi Chemical from after it moved in May from the levels of 160 to 220 levels. Now it is consolidating. As of now, if we see last 1 month, the stock has seen support around 189. That also coincides with 89 EMA. So 189 would be the stop loss, and on the high side, if we see 210, 215 is the resistance. That also coincides with previous high and 200 EMA. So 215 is the resistance. Once that is crossed, then we can expect some broad-based up move. On the downside, 183 should be the stop loss.
All right, 183 is the stop loss on Lakshmi Organic. It is time now to hit the rapid fire round. Samir and Rajesh, you know what this means. We'll throw as many questions at you over the course of 2 minutes. We'll start with a question on BSE. This is a question from Krishnan, who's writing in from Hyderabad. He's asking, can it be bought at the current price? And what is the target that you would put? Rajesh?
So as of now, wait, if it dips towards 2250, then can be bought for the targets of 2800.
Okay, the next counter is EPL Limited. Rajendran from Pulend is asking this question and wants to invest from a longer term perspective, wants to know if he can make the entry right now. EPL Limited is the counter. Rajesh, your view?
Once again, wait, dip towards 220 can be bought, and then the target would be 251.
Garden Reach bought at levels of 3,425. Sumon from Kolkata wants to know whether to hold for a period of 1 year. Rajesh, what's the view?
So yes, can be holded somewhere around 2350. There is strong support, and once momentum is there, 3200 can be retested.
Okay, Inox Wind is the next counter. Akhil from Dubai is asking this question. He got 23,000 shares bought at 172 a piece. Wants to know if it's a good decision to hold for the next 2 odd months. Rajesh, your view again?
Exit, overall there is weakness, and stock can retest 150 levels.
Samir, Interglobe Aviation for the medium term. Jayakrishnan from Kozhikode wants to know whether to buy at this point.
Avoid at this point.
Okay, Ircon is the next counter. Chandan is asking this question if he can book profits or continue to hold. Samir, your view?
Book profits.
Okay, SIAT results out yesterday. Sameer, would you buy at this point?
Yeah, I think you can add on to it. Ideally, I would like more of a correction closer to 3,200, but even 3,800 is fine from a long-term perspective. I believe auto industry, and especially tires, will do well.
Okay, Sula's the next counter, Sankar Narayan from Bangalore, Sula, and he's holding towards stocks of this counter and wants to know if he can continue to hold. Your view on Sula, Sameer?
Avoid.
Okay, Moschip, would you buy at this point, Sameer, for a period of 1 year, or actually hold if you bought it at levels of 210? No view?
No view, sorry.
Rajesh?
And hold on to it.
Okay, all right. We're completely out of time. Sameer, Rajesh, thanks so much for joining in, for answering all the questions. 32 questions is what we took over the course of the last 1 hour. Happy Friday to you, and indeed happy Friday to everybody tuning in. We've tried to take as many questions as possible. Of course, we also had the management of Polycab, and if we don't have any interruptions on Monday, we'll try and take more than 32 questions. Thanks so much for watching. Do stay tuned. Up next is Know Your Company from Mahima and myself and the team that put this show together. Thank you so much, and stay tuned.
Brought to you by Canara Bank. Together we can.
भाई बिजनेस रजिस्टर हो गया?
यस, सिर्फ करंट अकाउंट बाकी है।
करंट अकाउंट के लिए तो SBI बेस्ट है। यूएस मशीन मिलेगा और QR कोड भी। बेस्ट कैश डिपॉजिट लिमिट, ईस्ट और वेस्ट इंडस्ट्री में बेस्ट।
सबको पता है।
SBI करंट अकाउंट बेस्ट है, सबको पता है।
Samman Capital Limited announces a public issue of secured redeemable NCDs, offering coupon rate of 9% per annum for NCD holders in category 3 and 4 for 24 months in Series 1. Tranche 4 issue is open for subscription. To subscribe, log on to www.sammancapital.com. For issue structure, risk factors and more details, please refer to the Tranche 4 prospectus available on the websites of SEBI, stock exchanges, company and the lead managers.
My birthday gift to पापा, ये उनके पापा की पहली गाड़ी एक गैराज में पड़ी थी दार्जिलिंग में। तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
रास्ता है वही शहर।
तू कब आया अभी लाइफ से?
अरे वाह ताई, पहचान गई? शहर जाके आँख का ऑपरेशन करा लिया क्या?
शहर जाए मेरी जूती नहीं, यही अपने गांव में ही करवा लिया। वो जो सूरज है ना अपना, वो सब कर रहा है।
अरे राकेश, अरे वाह छोटी, ये स्कूल में सीखा?
इंटरनेट पे।
इंटरनेट?
हाँ, सूरज भैया है ना।
कौन है ये सूरज भैया?
आपको उनसे मिलना है क्या?
हाँ
चलो, वो रहे सूरज भैया।
हम सूरज से सिर्फ बिजली नहीं बनाते हैं, खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं। अदानी, हम करके दिखाते हैं।
Hello and welcome. You're watching KYC. Today we have a unique company in the oil and gas space that we'll be covering. We're talking about Deep Industries today. Let me first start off with what I want to know with regard to where Deep Industries is concerned. They've guided for a 25% growth. They're seeing good growth tailwind, but for how long is really the question, because it's a small company, 3,000 crore in terms of market cap, and therefore the tailwind can be very, very strong. The question is, as the base starts to creep up, and it's done a decent growth clip over the last 3 years, and you'll see those numbers, as the number, absolute number in terms of top line goes up, for how long can they grow at 25%? Really, that's going to be my question. The second one is they've announced a 500 crore capex. So I want to know everything about this. The funding, I also want to know what this does to capacity, and maybe not capacity per se, but in terms of top line capacity. How much bandwidth in terms of top line does this capacity expansion give to Deep Industries? And the third piece is with regard to ROEs, therefore, because it's such a large capex project, what the ROEs will be at the end of it, or maybe a year or two as this fully starts to kick through. Margins at 40% plus, they've guided that this is sustainable, but of course there's a possible downside risk from maybe a raw material price or otherwise. I'd want to explore that and understand that better. Now, Dolphin Kandla, this is the big piece, because there is a huge one-time knock which the company has taken in FY25. Likely that will not trickle through, but is there absolutely any additional risk with regard to Dolphin and Kandla, or is it fully provided, is what I would want to know. And what the possible upside to it is also something I'd want to know. So both set of risks, downside as well as upside. Then I'd want to know how much will Dolphin and Kandla contribute to margins, because this is more backward integration. So how much will this contribute to the margin number of Deep Industries, and how much otherwise can the margin number go up by in any case, is what I'd want to know. They've guided for maybe a 2% inch up in margins this year. 40 to 43% is the band they've given for margins. Last off, client concentration. Of course, very few players in the space, and therefore the clients are concentrated, but is there a thought process to diversify at all, and if so, how, is what I'd want to know. But let's start off with what the company is about. And we did say, and I did mention, that it's in the oil and gas exploration and drilling industry. It provides 70% of, or rather covers 70% of the value chain in oil and gas post exploration, and that value chain is largely what drives the numbers for a Deep. So let's understand the products and services better. One is the natural gas compression. This boosts gas pipeline pressure, and it calibrates the gas pipeline pressure, and that is one of the services that it provides. Second is gas dehydration, that removes water from the natural gas, making the pipeline safer. Third one that they do is workover and drilling rigs. Now this is of course for new rigs and maintenance of old rigs as well. So both of those is what this service covers. The fourth piece is integrated project management, end-to-end project execution when it comes to oil and gas. Charter hiring gas facilities is also what they cover. Full gas processing systems end-to-end is what they take care of. Production enhancement contracts, takeover and boosting oil fields already existing is also the other piece that they take care of. And then there is offshore marine services, where they provide supply vessels, tugs, and accommodation barges as well. So all of those are provided by Deep Industries. Then there's equipment manufacturing, and this is basically compressor boosters which they provide, among other equipment that they manufacture as well and they provide as well. And then of course it's trading. Specialized equipment is what they trade via international arms that Deep Industries has. So all of this is what they do. In terms of business model, let's understand that as well. They manufacture some compressors, chemicals via subsidiaries based mainly out of Gujarat, but the core is renting services equipment to oil and gas firms and a lot of them are Indian PSUs. So you have a decent recurring income which continues to come through as well. They also do selling, or rather they operate sites, they sell services, or rather they operate sites through in most Indian oil states. They also have forayed into global expansion, UAE, Africa, Mexico. How much of that diversification is actually playing out is what I'd also want to know. So that's going to be a key. Last one is with regard to raw materials, whether there's any risk of that. Well, in a nutshell, the risk is extremely low. Those are some key inputs for you in front of you. That's with regard to raw materials, certain suppliers as well. Let's pull those up. And those are fairly standard. And commoditization, yes, chemical spares, there is some bit of commoditization, but not too much. Price fluctuations are surely a possible downside. Timely availability of specialized machinery is the other big downside. So if you don't get machinery on time, you aren't able to execute all the contracts that you have. And that's something you want to keep in mind as well. So that's broadly the understanding of Adeep Industries. Let's start off with the 8 metrics that we'll talk about today with regard to Adeep: income statement, balance sheet, cash flow, return ratios, shareholding, street cred. We'll look at guidance that the company has given and thereafter derive valuations and try and see where it is, where the 5-year average price to earnings is concerned versus what valuations currently sit at. All of that on KYC today. Let me start off with the income statement. Now, in terms of top line, it's done 21% on a 3-year CAGR basis on the top line. You see the way in which top line has moved. It's moved from around 322 crore to 576 crore in FY25. There's been a consistent growth. The guidance continues to be 25%. We'll come to that when we come to the guidance metric. EBITDA has gone up by 26%. In the same time period on a CAGR basis. From 116 crore, it's come to 231 crore now, so doubled. Margins have also inched up from 36% to 40%, and profitability has gone up from 71 crore to 134 crore, which is a 24% CAGR. But something to keep in mind is you have a one-time knock on that net profit number of 251 crore in FY25, which we have ignored for the purpose of this calculation. Why have we ignored it? Because it was due to an acquisition, or rather a couple of acquisitions that Adeep Industries made of assets where the assets weren't fully, the receivables reflecting in the assets and the inventory wasn't correctly valued. So they've done an accounting adjustment, consolidated all the assets into Adeep Industries itself to try and work out efficiencies, and that's why there was an exceptional loss. The point being, it's a one-time exceptional loss. That's something to keep in mind. That's the trajectory in terms of margins that you are seeing. Now let's look at the balance sheet, and in the balance sheet as well, first off, this is a 3,000 crore market cap company with a near 1,800 or 1,850 crore book value. So that's for your reference with regard to the price to book. The borrowing number is also fairly low at just 205 crore. Very strong capex is what they've penciled in, and the cash and bank balance currently sits at around 51 crore. So fairly healthy in that sense. For a 3,000 crore market cap company, borrowing is not too high. This includes short and long-term borrowing, so 100 crore roughly each. So that's the whole picture with regard to the balance sheet. We've given this a thumbs up as well. No concerns. Let's talk about cash flow now. And when you're looking at cash flow, largely we've given this a neutral only from a perspective that cash flow, yes, very, very healthy. But the CFO to EBITDA in FY23 was slightly lower. So there's been some bit of choppiness with regard to CFO to EBITDA. That's something you want to be mindful about. But unwind has happened in FY24-25. So it doesn't look as bad at this point. Net cash flow, not exactly the metric you'd want to look at in a company which is investing quickly into capex. So that's something to look out for as well. They will continue to invest in capex, so net cash flow may not really come through, but again, not the appropriate metric. Operating cash flow is what we will look at, but we've given this a neutral out of abundant caution. Let's look at return ratios now, and you'll see the return ratios are on an upward trajectory, but they've not crossed 12%, and that's for me a bit of a concern. Can it cross 12? That's a question we'll pose to management as they continue to ramp up on capex. But 8, 10, 12, at least there is some bit of consistency to it. There isn't wild choppiness. We've given this a neutral, giving the management a little bit of benefit of doubt with regard to return on capital employed. But broadly, this is one metric which you really want to look out for, because if you're doing large capex, you want to see that the ROCE of the company is solid. So you want to keep your eye out on this one if you're looking at Adeep Industries. Let's look at shareholding now, and you'll see a decent shareholding sitting with the promoters. Very low interest from FIDIs, public hold the rest, and even in terms of number of shareholders, they've jumped substantially from FY22, where there were just 17,000 shareholders. You're currently sitting at 38,000 shareholders overall. So that's one metric you want to kind of consider if at all you are an investor. The number of shareholders has gone up, no FIDI participation, but a thumbs up nonetheless, because the promoters own a very solid 63.5% in the company. Let me now talk a little bit about street cred. And the street cred, 1 month the stock is up 9%, but you look at the 6-month trajectory, negative 21%. Year to date, negative 16%. 1 year, the stock is up 50%. And 5 years, it is up 22x. So what we've seen in a nutshell is that over the longer period of time, as the performance has really picked up with regard to this one, you've seen very strong returns. But in the near term, we've seen that there isn't as much return that investors have made. Is it time to be cautious or not? Well, we'll look at valuations, of course, and that will give us a better picture. But that's the street cred that we see at this point. Now let's look at the commentary that's come through. And this is an important one, because you want to see and you want to be sure that the commentary that's coming through is good. FY